Welcome everyone. In continuation to my last video, now we are going to do the second question and the third question. Now the part A of second question says ZA Limited is a manufacturer of the range of goods. The cost structure of its different product is as follows. The direct material cost is given for all the three products, that is 100, 80 and 80. Direct labor at rupees 10 per hour, 30, 40 and 50. Now the cost is given for each product and they are saying that it is the payment is per hour 10 rupees. So if I am paying 30 rupees for product A, that means I am consuming 3 hours of the direct labor. Similarly, 40 hours means 40 rupees means 4 hours and 50 rupees means 5 hours. Now production overheads also 30, 40 and 50. Now total cost 160 and 180 per unit. Quantity produced 20,000, 40,000 and 60,000. ZA Limited was absorbing overheads on the basis of direct labor hours. So obviously if it is on the basis of direct labor hours, if you see here also it is 30. So my first working note that I can say, or if I need it in future, 30 rupees is the absorption for each unit, and we know that product A, each unit is taking 3 hours, so obviously the absorption rate is rupees 10 per unit. A newly appointed management accountant has suggested that the company should introduce ABC system and has identified the cost drivers and cost pool as under. So there are 4 activities, that is stores, receiving, inspection, dispatch and machine setup. These are the respective cost drivers and the associated cost. The following information is also supplied. They have given the number of setups, number of order executed, number of production runs and number of purchase requisition for product A, B and C. Calculate the activity based production cost for all the 3 products. So first let us see what is my total budgeted overheads. Working note: calculation of total budgeted production overhead. Now we know there are 3 products, that is A, B, C. Product A. Now product A, total 20,000 units, and each unit we are absorbing 30 rupees. So the total absorption is 20,000 into 30, that is 6 lakhs. Similarly for product B, we have 40,000 units and we are absorbing rupees 40 per unit. So that would be 40,000 into 40. Product C, 60,000 units into absorption of 50 rupees, that is equal to 60,000 into 50. So if you see, our total budgeted cost is 52 lakhs. Total budgeted overheads is equal to 52 lakhs. Now let us see the cost which is given here. Is it also equal to 52 lakhs? Just have a cross check. 5,92,000 plus 17,88,000 plus 4,20,000 plus 24 lakhs. It is also equal to 52 lakhs. Ma'am, what if this is not equal to 52 lakhs? If it is not equal to 52 lakhs, we'll have to find out the difference, and that difference we will again distribute it on the basis of labor hours, giving a note that this is the difference between our budget and the associated cost, which is the details which are given, and that is why the remaining is assumed to be bifurcated or distributed on the basis of direct labor hours. Now since we have the bifurcation of cost given in front, let us distribute it between product A, B, C on the basis of our cost drivers. So here we are going to prepare a statement for distribution of production overheads. So we have particulars, basis, product A, product B, and product C. So our table is ready. Let us start. Okay, so our first cost is the store's receiving cost. What will be the basis? The purchase requisition. You can also write here in bracket, that is the cost driver. Purchase requisition. What is the ratio given to us? The ratio given to us is 300 is to 450 is to 500. Total of 1250. And our total cost is, let us have one more column here, total. Our total cost is 5,92,000. So for product A it would be into 300 divided by total is 1250. This. Similarly, product B it would be 450 and product C would be 500. This is the bifurcation of our store's receiving cost. Next is inspection cost. Inspection cost is on the basis of number of production runs. And the ratio for production runs is 750 is to 1050 is to 1200. So the total cost is 17,88,000 and the distribution, if I do the total for this, it is 3,000. So total into 750 divided by 3,000. Similarly, this would be 1050 divided by 3,000 and this would be 1200 divided by 3,000. Next cost. Next is our dispatch cost. Dispatch cost is orders executed. That is the ratio of 180 is to 270 is to 300. Total cost of 4,20,000 and here it would be this into 180 divided by, this is 570, 650, 750. Similarly, 1 second, let me just freeze this. Similarly, this would be divided by 270 and this would be divided by 300, giving me a total of 4,20,000. Now we have the last cost, that is the machine setup. It is on the basis of number of setups. Number of setups given to us as 360 is to 390 is to 450, and the total is 1200, and the total cost is 24 lakhs. So here 24 lakhs into 360 divided by 1200. Similarly, for these two, it would be divided by 390 and this would be 450. Total of 24 lakhs. So all the overhead cost, see what we have distributed is just the overhead cost. The total overhead cost for each of these products on the basis of activity costing is this. So they are asking us the activity based production cost. Now this is just the overhead cost which we have distributed. There is a direct material and direct labor cost which we have not added. So for all the three we are going to add the direct material as well as direct labor cost as well. So add direct material cost. Now they have not asked us whether they have not told us whether they need a per unit cost or a total cost. So what we can do is we can give them both the answers. So 100 is the material cost into 20,000 units. Similarly, here 80 into 40,000, and here it would be 80 into 60,000. Similarly, add direct labor cost. So I am going to copy the same thing and just changing the amount to direct labor cost per unit is 30. Here it is 40 and here it is 50. So what we have got is the total cost of production under activity based costing. So the total for this would be a sum of overhead plus material plus this. This is the total cost. Now if I divide it by the number of units produced, that is 20,000, 40,000 and 60,000. I will call this as A, small a, and if I call this as B, my cost per unit would be A divided by B. This divided by the number of units. So this is our cost per unit. Right? So we are done with part A, which is of 10 marks. Right, let's go ahead. Let's go to question number 2. This is my question number 2. Following figures have been extracted from the books of Mrs. A and R Brothers. Stock of raw material on stock on 1st March 2020 of raw material and finished goods is given to you. Similarly, stock on 31st March 2020 for raw material and finished good is given to you. Even the WIP stock is given. Purchase of raw material, sale of finished goods, direct wages, factory overheads, office and admin, selling and distribution, and sale of scrap. You are required to compute the value of material consumed, prime cost, cost of production, cost of goods sold, cost of sales, and profit and loss. This is also for 10 marks. I would say that if a question like this comes in the paper, it is like a boon for you. This is the best kind of question that can come. So let us start solving this question. We have to prepare the cost sheet. Okay, so I'm going to prepare the cost sheet and the format, particulars, amount, and amount, an inner column and an outer column. This is my cost sheet. Right. First is value of material consumed. So we are going to have point number 1, that is material direct material consumed. Now, direct material consumed, we start with the opening balance. So, opening stock on 1st March 2020 given to us as 6,06,000. Yes, add purchases. Purchases given to us as 28,57,000. Is there any expenses on the purchases given? No, there are no expenses. So less closing stock on 31st March 2020, that would be 7,50,000. So what we get is the value of material consumed. In bracket I would write here 1, that means this is the answer for part 1. So this would be a total of these three, 27,13,000. Next, what do we do after this? We add our direct labor, direct wages, given to us as 37,50,000. Is there any direct expense? No, there is no direct expense. So what we get is the prime cost. Prime cost is 64,63,000. After prime cost, what we are going to do is we are going to add, okay, they also wanted the prime cost. The second requirement was prime cost, so in bracket I will write here 2. Next is, after prime cost we add our factory expenses. We should always try to use the same words which are given in the question. So factory expenses 21,25,000. What we get is the gross factory cost that is equal to prime cost plus factory expenses, that is 85 lakh 88,000. Then if we, after that we add our opening stock of WIP, again given to us as 12,56,000, and less closing stock of WIP, that is equal to 14,22,000. Ultimate net of, so what we get is our factory cost. That is equal to gross factory cost add less the opening WIP. What we get is 84,22,000. They have not asked us for the factory cost. The next thing that they have asked us is the cost of production. So आगे from factory cost what do? We add the office and admin, assuming that it is related to production, since they have not specifically said office and admin expenses, that is given to us as 10,34,000. What we get is our cost of production or cost of goods produced. This they have asked us. This is the third point that they want from us, that is equal to factory cost plus the office and admin, that is 94,56,000. After that what we do is we are going to add our opening stock of finished goods and less our closing stock of finished goods. Opening stock is 3,59,000 and closing stock is 3,09,000. Ultimate net off is 50,000. So our cost of goods sold, which is the fourth requirement, is equal to 94,56,000 plus 50,000, that is 95,06,000. Now after that they have asked us the cost of sales. Next we are going to add our selling and distribution expenses, that would be 7,50,000, and what we get is our cost of sales, that is the point number 5. This plus this. So cost of sales is 1,02,56,000. There is one more item, sale of scrap. We had to add it here, sorry, deduct from here. So less sale of scrap, that is minus 26,000. So our cost of production becomes this. So 1,02,30,000 is our cost of sales. Just have a look at all the items. We have covered everything. purchases, sale, we'll write it at the end, direct wages, factory expenses, office admin, selling, sale of scrap. Everything is written. Now they need our the profit that we have earned. Profit this is nothing but our balancing figure. So our last what we have is sales, which is given to us as 1 crore 34 lakhs. So our profit will be 1 crore 34 lakhs minus 1 crore 2 lakhs 30,000, that is 31 lakhs 70,000. This is our profit. So with this we are done. We have calculated, okay, a profit also they wanted. So this will be point number 6. So with this we are done with question number 2A as well as 2B. The third, fourth, fifth and sixth we'll do in the upcoming in the new videos. I will stop this video here itself and stay tuned for the next video so that we can solve all the questions. Thank you.